Hello, I am Arun Krishnamurthy, and this is the third of my series on the fundamentals of banking law and practice. This particular slide is about getting into a bank and opening and operating accounts. That is, getting in deeper into what goes on behind the process of opening and operating accounts from a compliance perspective. You must have heard the words KYC, AML, FATCA all over the place. So I will try to give you a little glimpse into what goes on in these matters. So let us proceed. Welcome. And if you like the presentation, please make sure that you press the like button and forward it to other people you think would be interested in this. Now let us say that your corporate HR wants you to open a salary account. You have joined a particular corporation as a fresher, and they give you a nice letter asking you to open an account with a specific branch of the bank so that they're able to credit your salary to the account every month. When you go to the bank asks you to fill up a simple form and then asks you for what is known as the officially valid document OVD. These are defined as the passport, driving license, Aadhaar number, your election card, and the bank will also ask you for your PAN card. Now, this OVD is something mandated by the Reserve Bank of India, and you have to submit even though you have a letter of introduction from your employers who probably enjoy a very large banking relationship with that particular branch. But you still have to submit this OVD as per Reserve Bank of India requirements. And in case if your address on your Aadhaar card or your passport is not the same as where you actually stay, it will provide a temporary proof of address such as utility bill or property tax receipt, and to ensure that this is updated in your officially valid document, any officially valid document within 6 months. And if you don't have a PAN, you have to fill in a particular form stating the reasons for not having a PAN. Now, RBI mandates that all banks lay out a policy for onboarding customers. This is called the KYC, customer due diligence. And therefore, when you submit your PAN card and your Aadhaar number, it will be verified by the bank through, of course, subject to your consent, through accessing the necessary verification process. For other documents, they'll probably ask you to show the original to them and attest the copy that you submit to the bank. And some banks may send somebody or telephone you or your neighbors in your residence to ensure that you have the correct address noted in the bank books. And many banks have migrated to digital KYC, which Reserve Bank also permits. That means you capture a live photo of the customer, sometimes done over a video call, where you photograph yourself holding a PAN card and your Aadhaar card like this, and give a particular recital. And when this is done, the Reserve Bank expects that the actual latitude and longitude of the location where the live photo is captured is taken by recorded by an authorized officer. And then the usual process, they ask you for initial deposit, they'll give you a basic kit, etc., etc., etc. And in course of time, once they complete their verification, whatever back office process they do, you are in business. Your salary, savings, extra will be parked into the account. You can use it for expenses, credit card bills, so on and so forth. Now you may be worried that how safe is my data in the account? It is actually very safe because most banks have very strong servers and everything is managed through a core banking system. All the transactions are put through this system and there are very strict access controls. The State Bank Chairman joked that even he does not have the authority to go to the server room where customer data is stored. So high degree of security is observed. And if people do hack, it usually be some passwords here and there, which usually are trapped well in time. And one facet I would like to tell you is that during the lockdown condition, all the banks managed to ensure that their core banking servers were up and functioning almost from the day of the lockdown. And there was human service and sacrifice by bank officials, especially the IT staff. They were unsung heroes of the lockdown times. So let's move on and try to capture why RBI master directions have asked banks to have this kind of a KYC policy. So basically, the message is that definitely your accounts are under watch for various reasons, and banks have to adopt a particular policy and follow it. It's split into four. All banks have to have a customer acceptance policy. No account is to be opened in anonymous or fictitious names, and the various other checks and verification required for firms, companies, businesses, so on and so forth, trusts. So this is very necessary. And secondly, risk management is that the bank's software will have an algorithm that will categorize customers as low, medium, and high risk category based on their parameters as their identity, social financial status, nature of business activity, so on and so forth. If you're a salaried employee working with a prominent corporate, will be probably classified as low risk. But however, if a transaction in an account seem to be out of line from your normal salary and other savings, then it may be categorized into medium or high risk. Likewise, there are customer identification procedures. For individuals, I told you there will be some verification and periodical updation, and similar and more detailed process therefore firms and companies and so on and so forth. And the fourth instruction is monitoring of transactions. This monitoring of transactions is why I give the heading that you are under watch, because banks have to monitor transactions in the account through automated software. They classify customers into medium, low, and high risk, and they report suspicious transactions to something called the Financial Intelligence Unit, set up on the Prevention of Money Laundering Act under the Ministry of Finance, and also certain transactions are reported to the Income Tax Department. You may ask, look here, are not banks supposed to keep my financial affairs secret? Yes, they are, but these are statutory legal laws passed by acts of parliament, and this will override the bank's obligation to keep customers' financial information secret, and they're authorized to share this information with the concerned authorities. Let us go a little bit more in this. Now, I'm giving a case study that here you are, you opened the account with your preferred bank branch, and your uncle, who is your benefactor also, whom you trust completely, says that, look here, I've sold some property, I have 50 lakhs in cash with me, I don't want to keep the cash lying around in my house, so why don't you park it in your new account? Well, will you do this? What will happen is that in new accounts, most banks will put some restrictions on the kind of transactions. And definitely, if you go and deposit 50 lakhs into a newly opened account within, say, a few days of opening the account, most banks may refuse or they may ask various questions. And even if they do accept, this transaction will be reported as a suspicious transaction to the Financial Intelligence Unit. I will come to in a later slide as to why you don't want this to happen. Now let us say that now we have been operating this account for 2 years, you're stable, you're doing well in your job, you got a promotion, and there are plenty of transactions such as credit card bills and some investments apart from your salary, all this happening, and then what happens if your uncle makes the request now? Well, you may say, no, my savings bank account, the bank will catch me. But what happens if your uncle is a real estate dealer and he has the cash, and you say, please deposit in my business account with the same branch because I don't want to go to the bank right now. I'm busy with this. Well, again, as per law, deposits of cash of 50 lakhs and above invite attention of the anti-money laundering checking system and be reported to various government authorities under PMLA as a suspicious transaction. So then he explained to your uncle all this, and he said, okay, I don't have an account, but I will come to the branch and then invest this sum in a unit-linked insurance plan in the name of his dear niece or nephew. And well, what is wrong with that? Unfortunately, the bank will refuse, as the law clearly states that amount in excess of 50,000 for investment can be accepted only by way of an account pay check. In fact, the bank will not even accept more than 50,000 in cash for issuing of a draft or issuing of a foreign check. So that's why I think it is all because there are very strong laws against what is known as laundering of money. What exactly do banks report? What kind of transactions in your account will the bank report? Well, the RBI rules say that every bank has to report cash deposits and cash withdrawal transactions with 50 lakhs or more in a financial year for current accounts and 10 lakhs for a savings account. So your uncle's deposit of 50 lakhs in a savings account would have created all kinds of reporting requirements. And even in his current account, if he had been tried to deposit 50 lakhs in say 6 or 7 lots of 7 or 8 lakhs, even then that would have attracted suspicion if he does so in a financial year. Apart from this, a lot of other things are reported. For instance, if you buy or sell a property exceeding rupees 30 lakhs, the transaction will get reported to the Income Tax Department. Similarly, shares of mutual fund investments and purchase of bank drafts more than rupees 10 lakhs in cash get reported. In any case, the bank will not accept. So because of all these restrictions, it becomes, I think, the government has made it very clear they do not want large cash transactions. Now, I will also give you a little bit of insight into the kind of reports which the banks have to give to the Financial Intelligence Unit under the Money Laundering Act. Firstly, cash transactions. All cash transactions of value of more than rupees 10 lakhs or foreign currency cash transactions of this value have to be reported, including what the bank could say a series of cash transactions. If he makes 100 deposits of 10,000 amounts of rupees 10 lakhs, if the bank feels it's a pattern, it will get reported. So even if you, supposing let us say that your friend comes from abroad and he is carrying say around $25,000 in cash, He gives it to you. You try and deposit the dollar notes in a bank, it will get caught under this particular report. And there's something called the suspicious transaction reports, which the bank will have built in certain rule engines in the software to catch certain patterns of transactions which gives rise to suspicion that something is wrong. Usually the most, in its crudest form, it will be a transaction which basically is out of kilter with the normal pattern transactions in the account. For instance, you have a salary of say around 3 lakhs per month, and there are normal withdrawals for credit card payments, this and that, and then now and then parked into investments in mutual funds. But all of a sudden you get a large credit of say 50 lakhs or a foreign inward remittance of 50 lakhs. The bank will flag this transaction and ask you what it is about. Normally, if you give an explanation and the bank is satisfied, they will not report the transaction. But supposing you are evasive, you do not give an explanation or do not answer the question or give something that is not convincing, they might report. And it is not quite in the discretion of the bank. They have to maintain proper records stating why this particular transaction is not a suspicious transaction when it is flagged by the software as a criteria. So it's not easy for the bank either. And also there is one thing which is an aside, but it's good to know that the non-profit organizations and charitable organizations are under more scrutiny, and banks have to report transactions in such accounts quite often because unfortunately some of these, even though they are created for laudable purposes, some of these non-profit organizations have been used for laundering of money. The Prevention of Money Laundering Act is a tough act, and basically to prevent money laundering, and you find the media and newspapers are full of various people who have evaded law and siphoned money from banks, caused losses to the bank and run away abroad. So essentially there are two powerful functionaries, the director FIU who collects information and the director enforcement who acts on the information, and they have enormous powers to even seize documents and do investigations under the act. And this particular act imposed the obligation on banking companies and all kinds of financial institutions to report transactions and maintain proper records for a period of say 8 to 10 years after the transaction is complete. And all these transactions have to be reported to FIU, as I told you in the previous page. This act also defines what is money laundering. Money laundering is whether directly or indirectly somebody attempts to assist protecting or claiming any tainted property which is basically made out of the proceeds of crime. This includes, cash and the financial assets. Then you say that it's going to be a difference of money laundering. That simply, let me say that if I steal some jewelry and I sell it to a pawnbroker, I take the cash and deposit in the bank. Then the thief, the pawnbroker, as well as the bank are all cognizable as an offence under the PMLA. And the punishment is stringent. It is rigorous imprisonment for a term not less than 3 years, but may extend up to 7 years, 10 years in some cases. So it's a strict act, but then how well it is enforced, I will come to that. Meantime, you might have seen, I put a picture of Barack Obama on top. Yes, I do admire him for various reasons, but in his time, the US government passed an act called FATCA. And you may say that, look here, I'm an Indian, so why should I worry about a US Act? I've got nothing to do with the USA. But the fact is that this particular act, called the Foreign Account Tax Compliance Act, obliges foreign financial institutions to report foreign assets held by US account holders. That means if I hold an account with a bank and I have income that is taxable in the USA, then that particular bank has to do a certain reporting to the authorities of the USA as per this act, FATCA Act. And there's been an agreement between the governments of India and USA to put into practice this particular FATCA reporting for high value accounts. Essentially, what will happen is that banks will take a declaration of you saying that whether you have any US based income. And if you don't have an income, there ends the matter. If you have an income, then you have to give a series of declaration. And if the bank does not have any accounts in foreign currency on behalf of the particular person, there is no issue. Then lastly, as I told you, PMLA, it's a very tough act. Even then, how well it is implemented, I leave the question with you. There's a dark underbelly. Almost a decade ago in 2013, the Cobra Coast reporters in a sting operation approached almost half a dozen banks. And they told them that, look here, we are acting on behalf of a politician and we have about 80 lakhs, 1 crore, 50 lakhs of cash. And can you help me to launder the money? And the banks, of the concerned bank officials, I will not pass any judgment on them, but whatever has been reported in Cobra Post is that apparently the bank officials agreed that no, I will do various things. I will park this in multiple savings account. You can deposit the cash in 2 installments. I will give you lockers to keep large amounts of cash. I can help you to lend this amount to builders and so that you can earn some money, so on and so forth. So basically, it was nothing but money laundering. Had the Cobra Post allegations been correct. And in fact, so much so that as per the conversation reported, one particular bank agreed to invest in an insurance company, even though PAN was obtained. They said that, look here, we simply will not report it as a suspicious transaction. It's very unfortunate that this kind of thing has happened and it has destroyed the credibility of these banks to a large extent. I do not know whether they've since recovered from it, and but if you go to a bank today, they will not compromise even a single bit on the compliance for this particular PMLA Act. And in fact, all these banks, even though no transactions are actually done, the Enforcement Directorate actually fined all these banks. And they have posted the entire episode on their website for everybody to see. So then, that's how it is. So that's it for now. So thank you very much for staying with me through this small presentation. And I do hope to continue this series with something more on law and practice of banking in future slides. Once again, if you like the presentation, do press the like button and do share it with other people who you think may be interested in this. And I have pasted certain links in the presentation, which I will also paste below in the comments section so that you can access those material if you're so interested. Thank you very much and have a good day.